It's another business week. Welcome to Business Incorporated, coming to you live from Lagos, Nigeria. On the program today, Kenya shilling stable, shares under pressure after court ruling. Survey shows Nigeria and South Africa likely to get out of recession in the second quarter as GDP numbers set to be released on Tuesday. Plus, mining giant Acacia reduces operations in Tanzania. We get started now with the markets, and here in Africa, amongst the markets we track on the show, the NSE, that's the Nigerian Stock Exchange, and the markets in Egypt are still closed for the Eid holiday. However, in South Africa, the JSE index opened the week low, trading 0.20% at intraday. In Kenya, the shilling was broadly steady against the dollar in early trade today, but the bid-offered spread remained wide after the Supreme Court unexpectedly annulled August presidential election, forcing a rerun. On Friday, the Nairobi stock market closed heavily down 3.69%. And what are the near-term risks for the Kenyan markets? Let's talk to the African strategist at Rand Merchant Bank in Johannesburg, Ronak Gopaldas. Good afternoon, Ronak. Thank you very much for joining us.
Afternoon. Thanks for having me.
So what do you consider as the near-term risks for Kenya?
So, look, this was a political earthquake, and it was something that really caused people to react, shock and surprise. We knew that the result was going to be contested through the courts, but nobody really expected the result to be overturned. It was expected to play out as it did in 2013. And there's no precedent around this. So we're effectively back to square one, and that means that we have an electoral rerun which has changed the political calculus and the political equation entirely. So the big question mark now is, now what? And to what? A lot is going to hinge on the integrity of the election and the credibility of the IEBC.
So what are your thoughts regarding policy making and new economic initiatives as both the incumbent and the opposition focus now on the election rerun?
Yeah, so, I mean, the urgent priority for Kenya after this election would have been quick policy and an urgent focus on fiscal consolidation. Obviously, that has changed entirely because we're back into campaign mode and we're not sure what outcome we're going to get. In addition to that, even if Raila Odinga does win the election, the Jubilee party controls parliament, so there's going to be major policy inertia. So I think what's clear is that we need to have pressure for the foreseeable future, at least until you've got clarity around the results. Further policy inertia, so a lot of uncertainty, more questions than answers, which is really not good for the economy, and investors are going to adopt a wait-and-see attitude until we get a line drawn under this matter.
And what is your outlook for the financial markets?
Yeah, so the financial market reaction on Friday was quite violent. We saw the currency sell off sharply, we saw the Eurobond yield spike, and we saw trading on the Nairobi Stock Exchange ended for half an hour. I think today, is probably not a great gauge because it's a public holiday in the United States, so trading on financial markets is quite tense. So we'll be watching tomorrow quite eagerly to see what the reaction is. But definitely we expect some negative sentiment to persist as the uncertainty reigns. I think important to note on the currency front, though, the external environment is still favorable, and the Central Bank of Kenya has the firepower to protect the currency. But, in a period characterized by economic and political anxiety, I definitely think the trend in the currency is going to be a negative one.
All right, thank you very much for your thoughts there, Ronak. We'll sure keep a tab on the Kenya's market. Thank you for your time. Ronak Gopaldas is the African strategist at Rand Merchant Bank in Johannesburg. Now we'll move on now to the Middle East. Shares in Abu Dhabi listed Dana Gas soared early today after it agreed on overdue payments from Kurdistan's government, while United Arab Emirates stock markets were generally quiet and other regional bourses remained closed for Eid holidays. Data jumped to 14.1%. Kurdistan, an autonomous independence-seeking region of northern Iraq, agreed to immediately pay Dana's gas production consortium $1 billion, including $400 million that will be used for investments in the region. Dana will receive 35% of the money. In addition, $1.24 billion will be reclassified from debt owed by the government to outstanding costs to be recovered by the consortium from future revenues as it operates in Kurdistan. Other Abu Dhabi stocks were much more subdued, with the index rising only 0.29%. In Dubai, the index slipped 0.07% as Damac Properties dropped back 2.2% and Emma Properties lost 0.6%. The most heavily traded stock, Builder Drake and Score, added 1.8%. Qatar and Saudi Arabia remain closed for the Eid holiday. In Europe, markets were lower in morning trade as North Korea's latest nuclear test prompted investors to rush to safe haven assets. For more market update, I'm being joined by Janelle Dumalon, DWTV, Channels TV financial correspondent at the Frankfurt Stock Exchange. Good afternoon, Janelle. Janelle, is a beautiful week again. Welcome to the program. Now tell me, are the markets starting to shrug off the initial knee-jerk reactions to the North Korea's latest hydrogen nuclear test?
You're right, it is a beautiful week, North Korea notwithstanding, but we make the best of it, as you can see. I don't know if you can see the DAX behind me. It's slowly starting to recover, but really this day, especially in the morning trade, was marked by a flight of investors away from equities towards more safe haven assets like gold, like German bonds, the yen. Now, gold prices at some point even spiked to their highest level in almost a year. So European markets were down across the board. The DAX was leading the sell-off, and it wasn't just the security threat that had investors rattled. It was also that Donald Trump had made comments about considering the need to punish countries